It's been a month of extreme volatility in the markets, and it may not settle down anytime soon. That's according to a new spring outlook report from the world's largest asset manager, BlackRock. Joining us here on set is the author, Gargi Chaudhuri, BlackRock head of iShares Investment Strategy Americas. It's so great to have you on the show. Welcome.
Thank you. It's good to be here. Long-time listener, first-time joiner.
Well, we're happy to have you, and we want to break down this report because we are talking about economic uncertainty. We are talking about very dramatic volatility across a number of asset classes. How do you navigate that going into the rest of the year?
Absolutely. So a couple of things that we've been hearing from our clients and your listeners, I'm sure, is number one, if this volatility persists, how should we think about positioning our portfolios? Should we be moving to cash, which is the question that's topmost? And the second one is some of my traditional hedges haven't worked. So historically, if you've used long duration bond markets as a hedge for your equity markets, you saw some periods in April where that didn't work. So what should we do about that? So our spring investment directions is trying to answer those questions. Number one, stay invested in the markets. We saw the volatility. We saw how quickly it moves in both directions. So make sure you don't leave the market, but maybe move to some of the more, what we call the more defensive minimum volatility parts of the market that will give you a little bit better protection because of that lower volatility. And second, think about diversifying your diversifiers. So where you might have had long duration treasuries before, maybe think of a combination of the front end of fixed income markets, focus on income, think about gold, think about liquid alternatives that are more market neutral in nature. So that's what we've been talking about with our clients.
Has the definition of what's safe haven or what's defensive, has it changed in this environment? I mean, you just talked about long duration treasuries. I mean, typically, especially if you're concerned about slowing economic growth and uncertainty, that would perform well. It hasn't. We know bond vigilantes are back in a big way right now. So do we have to think differently about what constitutes safe in this environment?
I think a little bit. I think it's a little bit more nuanced in a world where you're seeing equity markets go down at the same time as bond prices, at the same time as the U.S. dollar. I think that trifecta has really surprised many investors. And I do think you have to think harder about adding an additional layer of diversification in your portfolio. So, for example, we look at U.S. investors, U.S. advisors' portfolio, and what we're finding is often more than 50% of them, more than 70% of them have a huge underweight to international markets. In a world where we might have seen some of the peaks of the U.S. dollar, maybe it stabilizes here, maybe it continues to go lower from here, can we get some benefits in international investing? We think so. So we're telling investors, add international here, add some European value here, we think. And another big theme that comes up a lot is the long end. As you mentioned, the long end of fixed income markets. That hasn't worked really for some time now, but certainly in 2025, that hasn't given you the diversification. So really focus on the belly of the curve and focus on income. We tell investors to move to strategies like BINC, which gives you that income in the belly of the curve with very little interest rate risk.
I want to go back to international.
Yeah.
Within the lens of China and India, because those are those two big billion population plus influencers. And as an investor, I've for a while felt like China and India tend to be easier to invest in the demographics from a fund perspective than, say, Latin America, the types of companies, et cetera. But they're each having issues. China with the demographics, India right now with a conflict and stability. How should investors approach the whole thing with that lens?
Yeah, absolutely. So we, in our outlook, we talk a little bit about, sort of reducing your volatility even when you're in the EM markets and focusing on minimum volatility EM solutions. And then we talk about another area of the world which is often overlooked in portfolios, which is Latin America. And we think that in this bifurcated, geopolitically fragmented world, can we find some opportunities, especially, obviously, volatility around, if the world goes into a recession, Latin America will not be saved. But if we stabilize for a little bit, can you find some benefits towards looking at some of those areas which may significantly benefit from the rewiring of supply chains, as well as being, from a valuations perspective, being cheaper?
So many LATAM funds that I look into are full of utilities and staid banks. And I really wonder, can an investor get the full economic potential benefit of some of these locales with the way these funds are constructed.
Yeah, I think so. And again, being very cognizant of diversification in this environment is important. So I'm not saying take all your portfolio and move it to ILF. You're not supposed to do that, or move it to Mexico. No. But to the extent that you've had U.S. only, and perhaps you've been considering adding some diversification, and historically you've only thought of Europe, why not consider, in addition to Europe, why not consider a fund such as, the one that I just mentioned, ILF, or even just focusing on Mexico or just Brazil? We think that makes sense. And I also want to point out that, you brought up demographics. I think there are other broader, themes that are going to persist in the markets, and I think we learn more this week with earnings. But AI as a theme hasn't gone away. We've talked less about it. I think we will in the weeks to come. But maybe this provides an opportunity. It provides a backup. The backup in prices provides an opportunity for you to get back into some of those themes that will be with us for years to come.